Good day everyone, I'm Dodo FS by name. Welcome back. In our previous class we talked about market structure, shift, market structure, liquidity and point of interest. Where we see market structure, we have two types of market structure. We have the market structure shift and we also have the breaker structure shift. We'll look deep into that in our previous video. I'm also looking deep into point of interest, liquidity, which liquidity or inducement, which you see the first value put back of a breaker structure or market structure shift is your liquidity or inducement. And we'll also look into point of interest, which is our POI. We also say that we have two types of point of interest. We have the order block point of interest and we have the breaker block point of interest, which also say an order block is a place in the market where there is an institutional order. There are zones that are surplus of buyers or sellers in the trade, which they are patiently waiting for trade to come to trigger them, and then they will buy or sell. So for a bullish order block, this is what it looks like. It's always usually identified on a downtrend. For your order block, it's usually identified on a downtrend. Let me use one of my chart for you. Here right is a bullish order block. It's been identified on a downtrend, right? So we expected the trade with a bullish order block. We expected a trade to come back, tap into it, then it now moves. While for the bearish one is usually identified on a downtrend. Okay, we're expecting the trade to pull back and then tap into it and then sell. That's for the order block and the bullish block. So there are institutional orders where there are surplus of buyers or sellers. Let me show you for an order block. Another block. This is an order block for a bearish order block. It looks just the same like this. You see, we expect it to come to it, tap into it, then sell. Right? This is the zones we're calling as our order block. Is one of the point of interest, which is the order block. And we also have the breaker block, right? The breaker block, they are failed order blocks. Understand, right? The breaker block is a failed order block. How can you identify a failed order block? An order block is expected to come and tap into it and pull back, right? So what happens if this order block comes to it and break it? Once it breaks it, that zone that zone serves as a failed order block. That means the direction of that trade is about to change, right? So we're expecting the trade to come back, tap into it, and then move. So once it breaks it like this, we call this zone as our breaker block. Then it moves. The same thing vice versa here. That means it's changing from sell to a buy. The same thing vice versa here. We're expecting the trade to come here. I expect this other block and then move. But once it breaks it, this zone is no longer bearish, it's no longer bullish. It has changed direction and the trade will be bearish. So these zones will be called this zone here will be called a breaker block, because instead of it to this line breaks through it and then came back to retest it and then pull back. That's what a breaker block is all about, right? And in this trade I'm going to show you how to identify a breaker block and an order block correctly, and how to use them correctly in your way of trading, in your career of trading journey. Understand, right? So we have 4 rules in picking a point of interest. Now let's talk about the 4 rules in picking a point of interest. Number 1, it has to trigger a shifting market structure or breaker structure. Now let's focus on the first part, which is the market structure, the shifting market structure. I will explain the breaker structure later for you. Understand? So we have a shifting market structure. Okay, this trade now, Now let's talk about the 4 rules in picking a point of interest. Number 1 said it has to trigger a shift in market structure or break of structure. Understand, right? It has to trigger a shift in market structure or break of structure. Let's focus on the shift in market structure. I'll be using chart to explain these things for you. So we have this break of structure here, and this is another block for this break of structure, or you can use zone as a break of structure, right? Before market down, take it out, or you can choose to use this zone here, but I'm using this zone out to pick out my break of structure here. Market, not break of structure, pick out my change of character here. Now let's talk about the 4 rules in picking a point of interest. Number 1, it has to trigger a shift in market structure or a break of structure. Let's focus on the MSS, which means shift in market structure. Right? Let me use chart to explain this thing. If in this we have a break of structure here, and also here like this, we have a break of structure right here like this. Right? For this other block of this break of structure, this is it here. This is it right now here. And if you can remember vividly, I explained what a break of structure means, and I will really explain what a market structure shift means. So for you to identify a market structure shift, the higher low of that trade must be cleared, which was being cleared here by this bearish movement. You can pick this zone as your MSS. Now I'll pick my MS. I'll pick the first part of it, which is the market structure shift. I'll pick it out as my first rule of picking point of interest. It has to trigger a shift in market structure or a break of structure, which I've picked my MSS already. Now the second part, it has to have a liquidity protecting it or inducement guiding it. So if you remember vividly, inducement is the first value pullback of market structure shift or a break of structure. So what is our first pullback now? We have a break of structure shift. We have the market structure shift here. The first valid pullback that the market did after this market structure shift was this pullback here. So now you pick it out as a first valid pullback. Then I'll label inducement. Now I'll pick out my inducement part of it now. Now let's go to the third part of it. We say it has to be the point of interest closest to liquidity. Understand? And the point of interest closest to liquidity, I don't see any point of interest that's close to liquidity. And remember, we have 2 types of point of interest. We have the breaker block, we have the order block. And if you notice from the diagram here, this is a bearish order block, right? So we're expecting trade to come here and tap into it and then to sell. So now we'll be looking for a point of interest. We're looking for a bearish order block, which this is it here, right here like this, and is the one closest to this liquidity we have here. So that's where I pick my order block. Or let me order block. Block or POI, point of interest. Now that's where I picked my point of interest. Trade now came to it and then it now sell. This will have this massive sell, right? Just like this zone here, we have this massive sell after it's been triggered. And for this point of interest, we have to make sure that it's unmitigated. It's unmitigated. It has never been tested before. Like we have to make sure that this point of interest we're using, the price has never come here to tap into it, then it pull back. We have to make sure of that. We have to make sure that the price has never come to this place and tap to that. So that it not be unmitigated. Once price came here and tap into here and pull back, that means the place has been mitigated. So it has to be unmitigated. And unmitigated is when a price came back to tap a point of interest after market structure, after market breaking structure or having a market structure shift, then market comes back to tap the point of interest. So it means that when a medicated zones are when a price came, when a trade came like this, come like this, instead of it to respect this place, now broke it and then came back to retest it for moving up. Sorry, I'm arranging it. Sorry. So it come back. Once it breaks it, it did not medicate it. It's only medicated when a price came back to tap the point of interest. So now instead of price to restore this point of interest, down broke it and then come back to tap into it and move it. That means is medicated now, but it's unmedicated as it is like this. So the same thing with this one. When it comes in, instead of to tap and move, it then came and broke it and then change it to a breaker block before it then tapped into it, before it now pulls back. I mean, it has medicated now. But if you check very well from this trade here, it has not been mediated yet. So price came back to this, to tap to this zone and then pull back. That's for the other block. And for the breaker block scenario, is, let's say we have something like this. We have something like this. This is a market structure shift. This is a market structure shift here. And while this is a breaker block, this is a BOS here, breaker block. Right? This is a breaker block or BOS right now here. So for you to trade a breaker block is what? A breaker block is a fill order block, right? This, instead of this trade, this was an order block, but instead of price to tap into it and then pull back, it then now fail, it then broke now. How are you going to trade this breaker block right now? The first step you need to do was to look for your liquidity. The first value pullback after market break structure. So let's say we have a first value pullback here after market moving structure. You notice that this first pullback it didn't tap this your point of interest, right? Then it now moves up, right? So now when this market is coming back, now are you going to pick this? Let's say this is your order block here. Let's say this is your order block here. When this rate comes back now, so are you going to pick, for this instance, this zone now we have a breaker block here and we have the order block right now here. So now this trade now give us our first pullback right here like this. So now, and it says the first pullback that market, the first value pullback market did is your liquidity. Let's say this is our liquidity. Let's mark it out. This is our liquidity. So now if you're going to pick a point of interest now, you're expected to pick a point of interest closer. It has to be point of interest closest to your liquidity. Are you going to pick this order block now as your point of interest, or you're going to pick this breaker block as your point of interest? We are going to pick this breaker block as our point of interest because it's the one closest to liquidity. Then this is when we put our buy zones here. We patiently wait for the trades to come back. To these zones, to tap into it, and then moves up, right? But that means this zone has been mitigated right now. So now the next trade is come back. You not use this zone as your point of interest. You use the next one that is closest to your point of interest now, or use another block now. Let me look for it on this chart here. If you notice my chart here, it's something similar to this pattern I just draw here. What did you notice? We have this is our market structure shift, right? And this place here is my breaker structure, right? And a breaker block is a field order block, right? So this place, so our first pullback, you can pick this zone as your first pullback. You can pick this one as your first pullback. So let me take this out. You can pick this one as your first pullback, which is correct, but I choose to pick this one as my first pullback, right? Market pullback, then it now went up, right? Now went up. So now my point of interest would be this one, because it's the one closest to the liquidity. That's when this trade came back to tap into my point of view before it then give me this TP right here. You see here the same thing. Now I'm patiently waiting for this other block here. I'm expecting this trade now to come back to respect this other block. And what would be my liquidity now? This zone here will be my liquidity. This zone here, which I've already marked out, will now be my liquidity, because I'm patiently waiting for that. I'm patiently waiting for that trade to come back to that zone, to this zone, then to come back to this zone and then move up. This is what I'm waiting right now on this trade right now. So that's it. You have to work with the point of interest closest to your liquidity. If you don't work with the point of interest closest to your liquidity, you will miss it. Okay, let's say for instance I was waiting for this other block now, and this is my point of view. I say I'm not pick this zone now. I've missed an opportunity of making this profit that moves up here right now. The same thing happens to this zone here. We work with the point of interest that was close to this point of this one. See it here. This point of interest. Okay, let's use this one here. Let's use this one. We have a breaker block, right? This one has been mitigated. It has given us a liquidity below here. And these are point of interest. Seen it, right? This one too has a little bit far, I think. This is it. Yeah. I picked this point of interest from this zone here. See it here. Now how I got this point of interest tapped into it. It has to give me another liquidity from this zone here, and I pick this point of interest, which I have this long buy here. Long buy this in this zone here. That went up straight to this point, but I get the recent highs. I don't go more than recent highs. That's what I did. I took all this trade. Let me show you before and after of this trade. All this trade I took. Okay. See, this was the one I just showed you right now here. This is it, right? It comes back. I pick my pick. Then now the next one I just came back and tapped into it. I now go. Now went up. This is it. I'll show you more of them on my trade up here. I pick them out. These are other block zones that I used to pick my point of interest. After this breakup structure, we have the liquidity, and then pull back, tapped into it, and then it moves off. Right? This is what we are having. So the point of interest, remember from the rules, your point of interest has to be the one closest to liquidity now. So I'm patiently waiting for this trade to come to this my point of interest. I've already set my alarm, and it will move on uptrend right now already. So you have to work with breaker block to the point of interest. This one has been negated. I can't come back to this because it has already been respected. Price broke through it and then came back to respect it, then moves off. That was what I was talking in this diagram. Understand? About mediation. Price broke through it, comes back to respect it, and then moves down. Breaks through it, comes back to respect it, and then moves off. Right? So now this is how you trade mediations on trades, right? Let me show you other trades again. Okay, let me give you a breakup structure on other block. This is another one here. I don't know that you see clearly, right? Right here. It's a breaker block. You think I see I didn't pick the other block first, right? I followed my rules very seriously. What happens? Market give me breakup structure here, right? Then it now comes back to tap into it. Then it now moves off. The same thing happened here. I marked out this zone, right? Which price came back after respecting this breaker block. What did it do? It then come back to respect this other block now. Right? This is my structure here. which I will label it MSS. And this is my inducement. You might not see it clearly. Let me zoom it for you. You might not see it clearly, but this is my inducement here. This is my inducement. I've noticed this is my inducement here. I can choose to label it X because we don't have the space there. X. Notice it didn't get space, it didn't trigger this until it came back to tap into it, they don't move. This, I think I picked this one because it's the one closest to the liquidity. It's just simple rules you've set for us. It's just simple rules. Follow those rules, they are good to go. Understand? But it says, the rule says it has to trigger a shift in market structure shift or a breakup structure. As of this year, I'm going to be sincere with you. This was an MSS, because this was an MSS, my shift in market structure. Because this year we already have here breakup structure here, right? So this was an MSS. Trade now took it out, then comes back with giving us liquidity before it now comes back tap to this one, and this is the point of view that is closest to our liquidity. It now tapped. I didn't pick this other block as one point of interest. I just left it. Then now went up again. We still have a breakup structure because there was a pullback, right? Before it now went up, and this trade before it now went up and was being taken out here, giving us MSS. And this was a pullback with this string here, giving us an inducement IDM as our inducement, right? And if you notice, which of this that is closest to the point of interest is this one. We now pick this point of interest and it goes up. The same thing happens here. This is our liquidity here. I marked it out already, right? This is our liquidity here. This is the point of interest close to liquidity. Now tapped into it. It then moves up. It's still the same thing. If you notice, it's just the same thing. You all really have to identify the trend and go with the trend. So I identified that this is a bullish, this US 30 is a bullish movement. So I just pick up bullish trend and I move my team, right? The same thing here. The same thing varies here. Same thing varies this up one I did here. I picked it and that moves. It's giving me liquidity here. Moves. Same thing here. I choose here my liquidity, pick this point of interest here, and I move for this bullish movement. The same thing happens here. Tap into it and move. But what happened? You notice something happened here. This particular trade, I picked the bigger block. I didn't pick the other block. It still came back. So now, because here has already been mitigated, price break through it, and then it was not unmitigated. It now came back to mitigate it. I mean, it respected. I mean, here is not valid anymore. That's why the next point of view that I will look out for, because here has already been mitigated already, so it's not valid any longer. And here is not valid. Here is not valid any longer. So I use this point of interest next now, and then use this place as my liquidity. Understand? Because if you check this one here, the first pullback, this was it here. I use this one as my liquidity, and I pick this one as my point of interest. This is why we have this other block as my point of interest. That's why we have this massive movement. It was a little money made on this trade. Now, it's the same thing I'm repeating down here. Here again. This place has been mitigated. I won't use this place here. I'll use this place as my point of interest. We have to come back to tap to it and then move up. Hopefully. Maybe from tomorrow or next, the trade will be triggered. Right? So these are the simple rules that you need to understand in trading. In trading a market structure, a point of interest. If you follow these 4 rules, you are good to go. Let me check my other trade. I think so. Expected it. So it like this. Same thing happens here. All my trades, it's just these 4 simple rules I followed, and I'm good to go. If you notice it, right? Now break of structure here, then pull back, give us liquidity here. Let me label it X, and then point of interest, expected it, then moves off entry, I pick the entry. Same thing happens here in lower time frame, same thing happens here, the same thing. It's all the same rules. You will go just identify the trend of the market and pick out your point of interest. So now in our next class we'll be talking about trendline liquidity. We'll be focusing on trendline liquidity. This is what you saw here. This is what we'll be focusing on our next trade. Trendline liquidity. The same thing happens here. We have an MSS here. MSS. Then trade pullback, right? Giving us liquidity here. And then respected this other block because this place has already been mitigated here already. So we pick this other block now as well. We'll move this trade, this up trade now. My take profit has been triggered. Which is what you see me right here, right now. Right? This is what you see. This is what you see. So you have to work with your trade with your point of interest, right? Understand the first part, it has to have, for you, the first rules, it has to have a structure, a market structure shift or a break of structure, right? Which we got in the break of structure here. Trade came back to tap it in and move, or we have a market structure shift here, then first pull back, which is our inducement, and then the point of interest. If you are good, you are good. Understand? You don't have to stress yourself. That's it. So you first learn how to identify your market structure shift, and you learn how to identify your break of structure. Then you learn how to identify your inducement. After you learn how to identify your inducement, then you learn how to pick the correct point of interest, the correct order block or breaker block for your point of interest. It has to be the zone that is closest to your liquidity. It has to be the zone that is closest to your liquidity. Put that at the back of your mind, right? Has to be a point of zone close to your liquidity, right? That's it. That's it. If you have any question, drop it on the comment section, and also please don't forget to subscribe to my YouTube channel, right? So that's all. I think that's all for now. Then next week we'll also talk about the trendline liquidity. Let me check my USDG point. Let me see whether I have any other trade here. Let me show you. Okay, still the same thing that happens here. This zone was indicated. This is the break of structure zone. That block came to my point of interest. Now move. This was the last trade I took on USDG today. Yesterday, sorry. Same thing happened. It's the same thing. You notice the same thing happens here. The same thing happens here. You just want to identify your pattern, and then you're good. Your trading strategies, market structure, which is the market structure shift or the break of structure, and the liquidity, the face value pullback of any market structure shift or break of structure, and then point of interest. Your point of interest can be your order block or breaker block. This is an order block point of interest, order block point of interest, while here is your breaker block point of interest. Let me label it. Breaker block point of interest, POI. That's it. That's not right. While it's your other block point of interest. I think that's what I'm having. And then also this is for the buy. Let me show you for the sell. I think I'll be my GPY here. GPY. We're having a breakout structure here, and the trade now change direction here, which we're having the MSS here, BOS here, we have a BOS here, breakout structure here, and the trade now change direction, right, giving us MSS, right? And after giving us MSS, the first pullback, MSS, giving us MSS, giving us the structure. The first pullback he did was this pullback. Let me label it as IDM. IDM, sorry, IDM call inducement, right? Give us this one as an IDM, right? Then the first value was this zone, right? Then the point of interest that was closest to the zone was this zone here, right? Which is my breaker block. I pick my breaker block as my point of interest, right? BB, point of interest, POI. Inside, should be inside, right? So this is it, and I took this short cell. Yeah, and we also have this breaker structure here, which was already mitigated. The first breaker block was mitigated already. Give us liquidity, and we use this other block as our point of interest. We have this simple movement. It's not hard to identify. See it now, for real. It's not hard to identify. Just focus on it, and you're able to go. And please don't forget to click on the subscribe button and share the video. Thank you very much for your time. See you next week.